After successfully installing the indicator, we will see this screen. It will look like this. We have indicator A and indicator B. Okay. If I hide indicator A and indicator B, you'll see that I have a channel already. I draw a channel here. If we go back to the daily chart, you will see I'm working every time on channels. You need to draw channel as well, because in order to use the indicator successfully, you need channels. So it's best to draw channels on daily basis, and also if you can also draw on weekly basis. Okay, then we will look for signals for our chart. Now let's go back. What is the components on the chart? We have number one, as we said, the channel, which you will draw manually. Then for the indicator for part A, we will have here three numbers: 1, 2, 3, 4. Now it is zeros. Okay, because I'm not selected any signal. If I select a short signal, I will get 4 numbers, or a long signal. Okay, then I have these 1, 2, 3, 4 zeros become with valid numbers. Okay, now we have those numbers. If you look, the first one, let's say for this short trade, for example, this is a short trade and this is a long trade. Okay, the entry point will be on the close. When the trade close, when the bar close, you will go short. Not here, it will be here. And on the long, you will get long, not here, it will on the bar close here. So for those signals, we need the entry price, the stop loss, and the break-even point, and the targets. So if we select any of those, you will see 4 numbers here: 1, 2, 3, 4. The first number is the size. The size, which is the unit I will enter the trade with. For this short trade, 9.93, which means 10. We are talking about gold, so the unit of measure for gold is ounce. So it is 9.9, which means 10 ounce. So if you go short here, you will go with 10 ounce. Okay. If you will go long here, you will go with 2.08, which means 2 ounce. Okay. Here, if you will go short, you'll go with 2.2. Here, you will go with 18 ounce. The size is vary between trade, but the risk is the same. So I'm losing on all trades the same stop loss, the same amount of dollars. How can this be? If we go to setting on the indicator, not this this one, part B, sorry. If we go to the setting on part B, we will have on the input, go down, you will find your balance, okay, and the risk. Your balance, your account, trading account balance, and the risk, how many % you want to risk per trade from your account balance. So 1% risk per trade, which means $100 to lose per trade. So my stop loss, if I hit the stop loss, it will be $100 because I'm trading with $10,000. Okay. I recommend you not to exceed 1. Maybe you can trade with 0.01, or you can maximum trade with 1% risk, especially for beginners. Okay. So in all trade, the stop loss is fixed in dollar amount: $100 here, $100 here, $100 here, $100 here, etc. for all trades. Okay. The stop loss can change, vary, and the size of the trade can vary. Because we are limiting our risk, but we are not limiting our profits. See the targets from TB2 until TB10. Okay. Also, you can see the break-even point, which is 2047. So when the price reach to this level, I will secure my trade. So which means to put my entry price into the stop loss field. So if the trade reverse, I will not hit by loss. I will hit by closing the trade with 0 profit and loss, which means my trade is secure. Then I will start scaling out from the trade from TB2 or 3 or above, but I will never scaling out before this. So if you see, there is no TB1 because closing your trade on TB1 is very wrong. These numbers, TB2 and TB3, mean risk-reward ratio because we are risking $100 per trade here. So if I close my trade on TB2, that means I will profit $200. Here, TB3, which means I will profit $300. Okay, TB10, which means I will profit $1,000. Okay, so these numbers also, stop loss, break even, and TB2 already existed here. Let's see if I select any trade. Now for this trade, if we will go long, we'll go with 2.08 ounce. Okay, and 1,979 is our stop loss, and 2,047 is our break-even point, and 2,123 is our TB2, which are the same, this and this and this. Okay, so this is the components. Plus, if you look here, we have a green background, and then we have a red background on part A, and also below we have a green background with a red background. This indicates the bullish trend, and the red indicate the bearish trend for our chart. Okay, so for this bullish trend, it is a bullish trend on the 4-hour chart. Okay, and this is a bearish trend in the 4-hour chart. Below is the bullish trend, this one for the daily chart, and this is a bearish trend on the daily chart, because the next one is, when you use 4-hour chart, the bigger one is the daily, and if you use the daily, the bigger one is the weekly. So once I open here on the 4-hour, then the below trend is the daily, which is the bigger one. Here is a bearish and here is a bullish background. If I open the chart here on the daily, loading, now I have bearish trend and bullish trend daily, bearish and bullish. This now is the weekly. This red line, red color is for bearish trend on the weekly here. And here is starting from here is the bullish trend on the weekly. Now we know the background color, what does it mean? Then we have two numbers here, which measure these bars. This histogram represents the momentum. Okay, what does this mean? We need now $30, because now on the daily basis the gold is bearish in a bearish trend. In order to reverse bullish again and become green background, the gold need $30, need to gain $30 up. So we will start seeing a green background, which means start an uptrend. This can happen in 1.09 candle, the time measured in candle, and each candle is 1 day. So this means in 1 day. The estimated time is 1 day. If we will see this, we cannot see this before the gold gain $30. If this happen, this need or estimated time of 1 candle, 1 day. Okay, if we go to the 4-hour, also the momentum here is very low. Gold is in a bullish trend on the 4-hour time frame, and if it will go negative and start a bearish trend, it should lose 4.8, which almost $5. So the price of gold should lose $5 in order to see a red background here, which means a bearish trend. The estimated time is 0.5 candle, and each candle here represent 4 hours. That's mean 0.5 of the 4 hour, which means 2 hours. We may see this in 2 hours. If this happen, it cannot happen before we lose $5. And if this will happen, we need estimated time to point with 2 hours, which means 2 hours, 0.5 of the 4 hour. Now, this is what does everything mean. And here we have pivots. This is intraday support and resistance for the intraday. So now we are on the pivot. Here is R1, R2, S1, S2. This is very strong indicators for the intraday support and resistance. And every day they will be removed from the previous day and will calculate it for the next day immediately and automatically. Okay, we have moving averages also. Here, if you look, we will see orange line, gray, blue, and red. The orange line is 20 period EMA, exponential moving average. The gray one is the 50 SMA, simple moving average. The blue is 100 SMA, and the red is 200 SMA. We use the 50 and 100 and the 200 as a support and resistance for targets and stops for the trade. We use the orange one, which is 20 EMA for trailing stops. Okay, we'll explain this later. Now, anything else? Oh, here is the size. Ah, yes. For now, if we said that we need to enter this trade, which is 2.08, which means 2 ounce. Okay. Will I write in my MetaTrader, will I write 2? Of course not, because I need to convert this from unit to lot. Okay. I need to convert this from unit to lot. Here, if I have 9.9 ounce, which means 10 ounce, how many lot? Okay, so I need to go for gold on my MetaTrader. For example, this account, I will go for gold and check the specification. I will see that contract size. The standard contract size is 1. What does this mean? 100. The standard contract size is 100. This means if I put here 1 standard, I will buy 100 ounce. Okay, so since we have 100 here, then in order to take this trade, let's see this one, I need to bring the calculator and to write. The trade tell me to buy 10 ounce, 9.9, which means 10 divided by the contract size here, 100. I will go, this is now the lot. I convert from unit to lot. I will put 1 mini lot or 10 micro lot. So I go to MetaTrader this is my correct trade size. Okay. Here we calculate this way. Okay. Same if we go for oil or anything else. Take another example here with oil. Let's say this trade. It say to 47. Look, 47 barrel, because the unit of measure for oil is barrel. 47. Okay, in my MetaTrader, oil is also 100. So I will 47, 100.47. I will trade for 4.7 like this. Okay, this way I will maintain that my stop loss on all trades the same. It is $100, which means 100% of my balance as we put in the setting. And so I limited my loss, but I did not limit my profit. I can profit here $200, $300, $500, etc. Okay. Now, let's take one example also. Do we enter all trades all trade signals appear on the chart? Of course not. We select the best and we will ignore the worst or the bad ones. So let's take an example for this trade. Here, I ignored this trade, and here I did shorted this trade. Why? Here, if we look, we will see that the entry price of the trade is almost near to the resistance here, which is the middle line of the channel. Okay. And we know it's better to enter long after breaking the resistance, not before breaking the resistance. Okay. This is a basic rule of trading. Now, I ignored this one. This is number one, the reason number one. Number two, inside the channel, I only have one TP, one target inside the channel, on the top of the channel. So, I don't see this is a very nice trade. I ignored it. But the other one here is the short trade. Here is the stop loss, and here is the TBs. If you look, you will have inside the channel, we have TB2 and TB3 and TB4. I have 3 TBs for this trade inside the channel. Okay. Plus, the entry price is below the support line, the middle line of the channel, the yellow one, and the price already break below. The price come from above and break below the support and closed below. Then I got the signal. So this is a better entry compared to this one. So I ignored this one, I entered this one. Okay, this is one example how we select the best trade and we avoid the worst and bad trades. So follow me on YouTube and TradingView in order to know more. And if you have any question or need any help, you can contact me directly via Telegram. I will be happy to help. Thank you.